It's exactly. We have that. Yep, there's people still logging in. Good morning. We'll be getting started in just another minute, just giving people a chance to join the session. And good morning, those who are logging in. Welcome. We'll be beginning in just another minute, just giving people a chance to get in. We have a few more people entering the room. And Joseph, when I turn my camera off, I'll be right here watching and listening, just not sitting here staring at you. So if you need anything, just holler. I'm right here.
Okay.
And
I will.
we're gonna get started. Good morning. A few more people have entered. Good morning. So hi, welcome. Thank you everyone for being here with us today. Today we have Joseph Ellis of Conetrix, and he is going to be presenting part one of a two-part series on the future of banking for credit unions, with today's focus specifically on blockchain and crypto in traditional finance, as well as central bank digital currencies, also known as CBDCs. For blockchain and crypto, it's going to talk about how financial institutions are entering the crypto and tokenized asset space. And when we're discussing CBDCs, what digital currencies mean for the future of money. So many of you who have attended our webinars recognize Joseph. He did 2 trainings for us last year. We were happy to ask him to come back once again. A little background if you're not familiar with Conetrix. Conetrix is a full-service computer networking, security, and compliance firm built on the principles of integrity, innovation, and initiative. They specifically serve financial institutions as well as enterprises requiring a high level of security in their operations. As for Joseph, who again we're welcoming back, he has experience performing IT audits for community financial institutions, with technology woven into his professional work experience for over 20 years. Joseph is part of the Boost consulting team. And as part of that team, he assists financial institutions in developing and maintaining their information security program, including business continuity planning, ISO support, risk assessments, cybersecurity, policies, and vendor management. So Joseph brings a wealth of knowledge, and that's why we invited him back. As far as today's format, we're going to have a Q&A session at the end of Joseph's presentation. We have time set aside, so feel free to hold on to your questions until the end of the presentation. If you have any, you can raise your hand and I can unmute you, or you can send that in the chat box and to Joseph directly, or I can read them to him. And with that, I'm going to welcome Joseph once again and let him get going with the presentation.
Well, thank you, Erica. I appreciate that. I'm glad to be back. I'm thankful for the opportunity to come back and say hi to everybody and talk about some new ideas. So, as Erica said, this is the first of a two-part series wherein we're going to be talking about new things on the horizon in finance and banking. Some of these new technologies, relatively new technologies that are no longer not so much fringe, weird Star Trek technology, but are finding their way into our daily work and the services that we provide. Um, so we're gonna start talking about that here today, and we will continue in a second part a little bit later, I believe in 2 weeks. Today, as Erica said, we're going to be talking about blockchain, cryptocurrency, and central bank digital currencies. Just real quick before we really get into the meat of the presentation, we do have this disclaimer just about the fact that this presentation is for information only. I'm not telling you to run out and start a new business or anything like that, but there are some neat ideas that we'll talk about. All of this is only my opinion. This is not necessarily what Conetrix would say or advocate or anything like that. And this presentation is proprietary because I made it up myself. Next, just a little bit about me. Again, my name is Joseph Ellis, and I am the manager for our Boost Consulting team. And I was talking with Erica earlier just about the fact that they tell you when you do a presentation, you're supposed to share something interesting about yourself. And my initial thought on that is that there's nothing. There's nothing interesting about me. I'm just a guy. I'm a dad and a husband and just living my life. But I was reminded that sometimes I like to share the fact that this is actually my third career. Um, Previously, I was actually a registered nurse. I worked in surgical intensive care for a short time. Well, it wasn't a super long time, but that was a really neat time. I got to see and do a lot of really interesting things. And then, strangely, I became a landlord and I owned rental properties. And I did all the maintenance work for those rental properties. I hung sheetrock and did all the plumbing repairs and painted and fixed appliances and all that stuff and wore my jeans and steel-toed work boots. Um, I did that for 15 years. And then, like you do after you finish being a landlord, you become an information security consultant and an IT auditor. I think that's the natural progression, and that's where I landed. And I've now been at Conetrix for several years doing that, and I'm the manager for our consulting team now. And then just a little bit more elaboration on who we are at Conetrix. Under our Conetrix umbrella are four separate technology companies. The company I'm a part of is called Conetrix Security, and that contains our auditors, which is what I used to do. It contains our pen testers, our penetration testers, the super duper Jedi wizards of technology that can just do amazing things. That's just a bunch of hocus pocus to me. They do some really fantastic things. And then our Boost Consulting Group. And we come alongside our financial institution clients and help them prepare for exams and audits and respond to those exams and audits and help them keep their information security programs strong, robust, current, all those kinds of things. And that's what we do day in and day out. Okay, with all that said, let's go ahead and dive in to our presentation and the obligatory agenda slide at the beginning of every presentation. Let's talk about what we are going to talk about. First, I want to highlight and discuss what blockchain is, sort of as an introduction. Let's lay some foundation and have a not an in-depth super, we're not none of us is going to get a doctorate in blockchain today. But let's get a foundational understanding of what blockchain is so that as we go further through the presentation, you'll be able to understand what we're talking about. And I'm sure, I suspect there are probably blockchain experts here with us today that will be laughing at me for my relatively simplistic explanations of things. But we'll start with that. Then we're going to talk about how blockchain and crypto or cryptocurrency are being used or can be used in our traditional finance world, our traditional activities of banking and lending and all those sorts of things. How can we adopt or adapt blockchain technology and cryptocurrency into that space? And then finally, we're going to talk about this whole idea of central bank digital currencies, CBDCs. For the last few years, that has seemed sort of like a hypothetical, like, oh, technically we could use this technology to do these things. And now we're seeing that these things are indeed being done. So we'll talk a little bit about that, about central bank digital currencies as well. Okay, so let's dive in. Let's talk about this question. Let's ask and answer this question. What is blockchain? Um, if you are like a lot of folks, like me, when you think of blockchain, this term, blockchain, quote unquote, you may automatically think of cryptocurrency as if those two terms are synonymous. Blockchain equals cryptocurrency, right? You might kind of make that connection in your mind. But let's be clear, blockchain is not cryptocurrency. Those are not the same thing. They so often land in the same space and in the same conversations and within the same contexts, but they are not the same thing. Blockchain is simply, let's and now here's where the blockchain experts will start laughing. Blockchain is simply a technology. It is a new technology. Just like we've had throughout all of human history, there have been new technologies that come along that help us do new things in new and novel ways. Blockchain is a technology, okay? It's a technology that allows data to be stored across a network of computers in a secure and transparent and, importantly, tamper-resistant way, okay? So, first and foremost, get this lodged in your mind. Blockchain is a technology. Okay, now more specifically, blockchain is what we call a distributed ledger technology. So think about a ledger, think about a list of records, a list of transactions, and now think about that list, that ledger being distributed. Okay, so a distributed ledger means that many copies of this data are stored either in part or in whole, across a broad network. Uh, a broad network of nodes are all storing a copy of this data. Usually, that data is stored in many copies in its entirety. Every node on the network has a complete and entire copy of that data. In some instances, the nodes will contain a piece of that data, a section of that ledger. But regardless, the idea of a distributed ledger has to do with the fact that these records, this data, is copied and stored across a network of many nodes. This network can span just a region. It can span an entire nation, the entire United States, or the entire European Union, or it can indeed span the entire world. There can be nodes for a particular blockchain network all over the world, each with a copy of the data from the chain. So, what does that mean? That means that if any sneaky person tries to come in and make a change to that data, well, every other node, all those other nodes that have a intact copy of that data will disagree with you. They'll say, nope, that data has been corrupted. That's where this tamper-resistant aspect of blockchain comes in. The fact that so many nodes, so many people have a copy of this data means that tampering with the data is is so nearly impossible as to be practically impossible. Okay? So, this chain of digital records is maintained across all these nodes, and changes to that data can only be finalized when consensus is reached across the network. Everybody on the network has to agree that that change is valid, that new addition of data is valid and correct, and they all agree and reach a level of consensus, and then we keep on trucking. We've added data to the chain, everybody agrees that it's valid, and now that data is there, part of the chain, and it is ostensibly safe from tampering. So this chain of digital records or data, this data is stored in what we call blocks, as we see here on the screen. This data, importantly, is cryptographically secured and chronologically linked, this idea of a chain. So cryptographically secured simply means that these blocks, each of these blocks is encrypted or hashed. You talk about password hashes and things being hashed. That is simply applying a mathematical formula or algorithm to a block of data and converting it into a string of letters and numbers, which is called the hash. Now, importantly, in cryptographic hashing, if you make the slightest change to the underlying data, it drastically, completely changes the resultant hash. So that's how we check passwords. That's how we verify that when I log into my whatever website I'm logging into and I mistype my password, The website is not actually comparing my password, it's comparing a hash of what I just typed in to their stored hash of my valid password. And if I mistype my password, the hashes won't match and it'll say, no, that's not the right password. Same idea here. The data in these blocks is cryptographically hashed. And just a slight change in the data upsets the hashing and everybody notices it. This idea of these blocks being chronologically linked has to do with the fact that each block, now this is the neat thing, this is the cool thing about blockchain. Each block contains a reference to the block before it. Okay, so whenever a new block starts to be created, it includes the cryptographic hash of its predecessor. And so, if anybody tries to change data in previous blocks, it breaks the chain. It breaks the blockchain, and everybody knows that that data has been altered. So, by its very nature, blockchain is tamper resistant. Okay, so because of this structure, since data cannot be altered, you can't go back in the chain and change any data without altering all the subsequent blocks and setting up red flags and alarms. Um, this this blockchain has a level of security that we haven't seen in previous technologies. In order to do something like that, if you did want to sneak back into the blockchain and alter data without setting off alarms, you would have to own or control over half of the entire blockchain. And more specifically, you would have to control more than half of the entire network that the blockchain is stored on. You would have to force consensus if you want to make sneaky changes. You would have to own most of that network and declare that that change is valid and force consensus to happen. So, as you may imagine, there could be thousands and thousands of nodes. Can any one hacker or hacker group gain control of 51% of those nodes and thereby gain control of the blockchain and do whatever they want to with it? Probably not. That's going to be a very daunting challenge. This is a neat new technology that is highly, highly tamper resistant. Okay? So, with that in mind, understanding the idea of what blockchain technology is and how it works, let's highlight some of these key characteristics that I've been rambling on and on about. First of all, and importantly, perhaps most importantly, this blockchain technology is decentralized. That idea of the fact that Joseph, I cannot control the whole network. I cannot force consensus to happen. I cannot change any data without setting up alarms and red flags. This technology is based on the fact that it is decentralized. That's a key aspect of blockchain technology. Secondly, there's a high level of transparency. This data is not stored in some secret vault that nobody can see. It is indeed encrypted, but it's out there. It's out there on the network. It's out there on the internet. Anybody can go and look at these blockchains and they can see them being added and lengthening and more data being added and transactions happening and things. It's all encrypted. It's all anonymized, but it's not locked away in a vault. It is transparent. People can watch a blockchain and see what's going on it. Thirdly, we have this idea of immutability. We've been talking about that, the idea that it is all but impossible to change data without achieving network consensus. It breaks the chain and it sets off alarms. And finally, all the encryption that's involved here helps secure the integrity of this data. Now, your transactions or your data that are being stored on this blockchain, again, are encrypted. They don't see that Joseph spent X number of dollars at X website. They don't know that that was even Joseph, but they see that a transaction happened. And that's out there in the public, that it is encrypted. Okay? So with all of that said, how can we, how do we put this to use in our real life, in our real work? Let's move beyond the idea of hypotheticals and Star Trek technology and consider how can we actually put this to use? What does this actually look like? So let's talk about some common use cases or well-known use cases for blockchain. This gets back to the original idea. We often think of cryptocurrency as one of the key ideas. And we said that they're not synonymous, and that's true, they are not synonymous. But yes, blockchain can indeed and often is used for cryptocurrency. Cryptocurrencies are these digital currencies that can be used for transactions. And these transactions and balance information are stored on chain. We call this on chain. Common cryptocurrencies that we've heard of are Bitcoin and Ethereum, and there are stable coins. Just as a nation may choose or opt to peg its currency to another global stable currency like the US dollar. They might peg their currency to the US dollar. Cryptocurrency can be pegged to some other stable currency like a US dollar. And we call those stable coins. Examples of those are like USDC, US dollar coin, so to speak, or USDT, US dollar tether. Um, Oftentimes, if you are on a cryptocurrency trading site, something like Coinbase or crypto.com, oftentimes you will not use your US dollars to purchase cryptocurrency like Bitcoin. You will convert your US dollars to a stable coin like USDT, Tether, and then use that to buy and sell your cryptocurrency on that site, on that platform. Okay, so that's a common use. That's something that we're more familiar with, the use for blockchain. Next is something that's really, really interesting, this idea of smart contracts. I want to highlight this because this idea is going to come up several more times as we move on through this presentation today. So think of a contract, pages and pages of text and declarations and promises and all these things. And if this happens, then we will do that. And if you do this, then we will do that. All these contractual, basically if-then statements. Well, think about what if we could take those contracts and turn them into computer programs? What if we could programmatically say, if the buyer agrees, and if the seller agrees, and if the buyer transfers money into this bank account like they said they would, then ownership transfers. Well, right there, you've got yourself a smart contracts, a programmatic, self-executing agreement. Okay. And now think about what if we could monitor the state of that agreement in the future, time going forward? What if we could monitor for continued um, obedience, compliance with the terms of the contract? And what if that program could pick up on violations or non-compliance of the contract and then trigger consequences, implications, ramifications, nullification of the contract? This can all be done programmatically um, via these smart contracts, which is a really neat idea. Next, we have this idea of decentralized finance and decentralized exchanges. Um, Blockchain technology can allow people to borrow and lend and trade assets without an intermediary. Now, that might sound scary to some of us. I mean, because that's us. We are the intermediaries, right? But this technology can allow just normal folks out there in the world to execute these sorts of transactions in a trusted, secure way. And we'll talk about this. We'll talk about the ramifications as we move on. And there's also this idea of digital autonomous organizations, or what we call DAOs. And these are kind of along the same lines of smart contracts. These are organizations that are self-monitored and self-regulated based on rules that are encoded programmatically. And these can indeed be companies that can make decisions based on votes of the people in the DAO. And if enough votes get amassed to yes, do this thing, or no, don't do that thing, then that thing is automatically either implemented or not programmatically, without all the hemming and hawing and and the yeah buts and all the conversations. Just programmatically, we set up these rules. If everybody votes to do it, it's done with these digital autonomous organizations. So lots of use cases, lots of interesting and maybe weird and maybe kind of spooky or scary use cases out there for this blockchain technology. And these things are indeed being done today. They really are. So why does this even matter? Why is blockchain even a thing? Why do we care? Well, because blockchain introduces a new paradigm or a new model for digital trust. Whole economies, entire marketplaces are based on trust. Okay. Now we're in the realm of digital trust, wherein I can transact or interact with somebody that I've never met. I don't even have to know their name. They can be somewhere else on the other side of the globe. We can transact and interact in a trusting, secure, encrypted, immutable way using blockchain technology. And we don't have to have an agent. We don't have to have an intermediary. We don't have to have a broker. We don't have to have a platform. We can simply interact on chain and conduct transactions. So again, that can kind of sound scary to us because again, those of us here today, we we are those intermediaries. We want people to come to us to let us help them with this kind of stuff. So if all this kind of stuff can be done without intermediaries, then how does, or in fact, how can this fit in with our traditional banking and finance activities? Well, I'm glad you asked that. Let's talk about that. Let's talk about some of the ways that this technology can be leveraged in some of our more traditional activities. So let's talk about lending. Okay. This, I get excited about this. I think this is pretty neat stuff. Think about what it might look like to conduct loan origination and servicing through smart contracts. Think of all that paperwork, all that underwriting, all those checkboxes. What if all that could be, or even some of that, or most of that, what if that could be done programmatically with a computer program that has very strict rules, very clearly defined rules, and even contingencies? What if something changes? What if there's this nuance? What if there's this shade? What if there's, these little adjustments? That can all be included in the program in the smart contract. But how much more efficient would our loan origination and processing and servicing be if we could do some or most or all of it programmatically using smart contracts? For example, a smart contract could release funds. It could trigger the releasing of funds only after all the underwriting conditions are met. If all the underwriting conditions are met, boom, funds are released, done. Let's move on. That could happen. What about sharing data for co-lending? What if, excuse me, what if more than one credit union wanted to partner? What if we wanted to have several credit unions partnering on large loans and they could share data on a chain, on a blockchain, and any updates to that data achieve consensus. So we know that data, those changes, those additions are valid. We all agree. And instead of having to re-verify and re-validate data over and over and over again, it's just all on chain and it's all out there in the open and we can all see it. And it can be so much more efficient. Excuse me. Think about the idea of shared ledgers. We we talked earlier about the idea of distributed ledgers being distributed across the network. What if we, as credit unions and credit union service organizations, could share chains, could share blockchains, could share ledgers for whatever purpose? For example, what if a group of credit unions in an agricultural environment, they might like to share some sort of a blockchain-based registry for lending, for risk determinations, to help approve things more quickly. And what if this could all be transparently available for our regulators? and they could just see that we are following proper procedure. Everything is verified, everything is validated. It's all right there, easy to see, with no chance of contamination or loss. That is a pretty neat idea. Excuse me. Take a sip of my coffee. I apologize. Kind of just hit me all of a sudden. So speaking of working with these regulators, who we love, they bring joy into our lives and in our days. Speaking of that, let's talk about how blockchain can be used in the realm of compliance. Okay, you might imagine within the realm of know your customer KYC and AML, what if you could have some sort of a shared identity framework? There is something out there called My CU ID, My Credit Union ID, and other similar tools that can allow for reusable, verifiable member credentials that can be shared securely across institutions. I can come and open an account at Credit Union A, and my data, my KYC information can be put on a shared blockchain within, say, a network of credit unions. And the next time, if I want to go and work with another credit union, say open a loan over there within this network, I can say, yeah, I'm Joseph, and I've already verified my identity over here. You can look me up. And they'll look me up on the network and say, yep, we see that you've been validated. We know who you are. We know about your credit score and all this stuff. And yeah, here, let's get you in here. We'll get you a loan real quick. Imagine how quick that could be. Think about this idea of these records being immutable. Again, the idea of sharing these records and showing our due diligence and our vigilance with our regulators. And the fact that these records are immutable are that they are secure. We're able to say, yep, see, look, here's everything we've done, warts and all, um, stored out there on the chain, on the blockchain, and it is immutable. It is secure. What if we could use smart contracts to monitor risk exposure? What if we could say if XYZ event happens and therefore risk elevates to such and such threshold, trigger this action, shut down this contract, extend this loan, turn this into collections. Think about all those sorts of things that can be uh, either fully automated or at least can raise some red flags. We can at least implement risk monitoring through smart contracts. Okay. What about member identity and authentication? We already talked about the idea of me, if I want to authenticate and validate my identity with one credit union and then port that over to another credit union, there is this idea of having a reusable digital identity. And in fact, I could go and create my own identity verification or validation on platform. There are platforms out there that can help me do that. And then I can go to a credit union that is, again, in that network or uses that platform and say, yep, here's my digital ID. I'm fully validated, fully verified, easy peasy. There you go. I'm Joseph. And then you don't have to go through all the steps and all the hoops and all the verifications and all the stuff. It's been done. It's already been, I did that. I did that for myself. Here you go. Here's my ID. What if we could do that for documents? What if we could we could cryptographically hash and timestamp these documents and know that this document that Joseph signed is indeed valid as of such and such date digitally? That can be pretty neat. What if with my digital ID, I could come to your credit union and say, I am Joseph. Here's all the information that you need to know about me. I'd like to open an account, please. I could do that online. I could do that on your website, and you could just get a notification that says, hey, we have a new member. His name's Joseph. He's really great. Think about all the paperwork and the hours that could be saved, all the errors that would not happen, because this is all being done programmatically, cryptographically, in a secure and transparent way. Pretty neat stuff. And then finally, what about cryptocurrency services? Back to the idea of crypto. We think of blockchain, we think of crypto. What can you do as a credit union? Well, you can partner with, say, crypto custodians to help hold these investments on behalf of your members, but you could provide the platform for trading and exchanging these sorts of assets. You can partner with these services that are already out there. And then what if you took it a step further and you offered white label services? What if you partnered with some sort of a platform, a custodian or an exchange or a marketplace that would allow you, your credit union, to white label their services and sell them to your members on your website? The ABC Credit Union Whiz-Bang Cryptocurrency Service. We've got that for you, for our members, because we love you. Think about that. That could be a really neat idea. What if we could implement lending using cryptocurrency? We could allow our members to use their crypto holdings as collateral for fiat currency loans, for US dollar loans, without needing to liquidate, without needing to convert that Bitcoin or whatever it is into dollars. We could just say, okay, we see that you have X amount of Bitcoin. Yeah, we'll accept that as collateral, no problem. And of course, you would need to consider market risks and all those sorts of things as part of that process. But again, that could be done programmatically. What if what if you have in your area, in your uh, customer base or member base, um, what if you perceive the fact that maybe there are a lot of younger people, maybe there are a lot of more tech savvy people, maybe you would like to attract them with crypto rewards? You know, come and open an account and we'll give you X amount of Bitcoin. We'll just load that right into your account, just as a thank you for joining us. That could be really neat. What if you could, um, you know, add certain amounts of stable coin? We're going to give you 5 USDTs, USD tethers, into your account if you do this or you do that, or you sign up for e-statements or, whatever you want to do. All of this could be done in the crypto space. That could be kind of neat. What if your members could send peer-to-peer payments or transfers using crypto? Again, what if you have members that really like that idea? They Some of your members might see crypto as the future of currency and transactions, and they may want to do that. Well, this really is in reach. There are platforms and there are services out there that can help you and your credit union implement these sorts of things for your members. This is really real. And think about how all of this being digitized and programized, for lack of a better word. Think of all these things being done via smart contracts, being done programmatically. Think about how much more efficient and error-free, almost entirely error-free, if not entirely error-free, these sorts of transactions and payments and settlements and transfers could be if it's all done digitally and it's all done with crypto and it's all done on chain and it is immutable and it is secure. That's a pretty neat idea. I'm not saying that it's the end all be all of transactions, but it's a pretty neat idea. And people are already doing these things. You could do things internationally. Think about how international transactions and payments could be sped up and verified and validated and secured so much more quickly using this technology. So far, we've talked about um, the idea of this blockchain technology, what it looks like, how it works, what it means, um, how it is used out there in the world just by crypto nerds and blockchain nerds that are just out there experimenting and having fun and trying all these things. We've talked about how those things can be imported or inserted into our traditional banking and lending and finance world, how we can adopt and leverage this technology to provide these services for our members. For our real life people buying their groceries and buying their gas and all this stuff, we can use blockchain and smart contracts and cryptocurrency to add to our portfolio of services. But what if this expanded? What if the use of cryptocurrency, digital currency, became standardized? What if instead of being sort of a nerdy, sort of fun, sort of novelty technology experiment, what if instead of that it became the norm and was adopted at a federal government level? And my my cynical self might say, what if instead of creating dollars, our American Federal Reserve created some sort of standardized digital currency? What would that look like? Well, now we get into the realm of central bank digital currencies. Federal Reserve or some other central bank of some other nation creating and normalizing and standardizing digital currencies, central bank digital currencies. That is an interesting idea. Okay. And I'm going to do my best to not share my bias on this idea. So let's talk about it. Let's talk about CBDCs. What are central bank digital currencies? Well, first of all, as we've said, it is a government issued digital currency. Okay, let that sink in. This is not Satoshi Nakamoto experimenting and trying out some computer programming and coming up with this weirdo thing called a Bitcoin and buying pizza with it. This is not Vitalik Buterin creating a new cryptocurrency called Ethereum as an experiment, as a fun thing, as a neat thing, as an exploration of technology. This is the idea of a government issuing a digital currency. Our US government issues and creates US dollars for us to spend and transact with and pay our taxes with. What if they issued a digital dollar? Okay, that's what we're talking about. Central bank digital currencies, there's a clue in the name there, central bank digital currencies are centralized. So unlike cryptocurrency, which can just be all over the world, everywhere, a big pile of spaghetti, big pile of blockchains, just anywhere and everywhere. Central bank digital currencies are indeed centralized. They are issued and controlled by a central bank. Okay, that's a key point. There are several examples, there are many examples of CBDCs being both considered and indeed developed and implemented even around the world. Some examples include the Chinese digital yuan. There is a European digital euro in the works. And there are articles out there where you can read about this. And in fact, the Federal Reserve has been considering and investigating what it might be like to issue a US digital dollar. These are very real things that do exist or are on the cusp of existing. It's not just hypothetical. It's not just Star Trek, what if this technology could be used to do these things? These things are being done. So, what does that mean? What does that look like? Let's think about um, some of the ramifications, some of the implications of CBDCs. So, ostensibly, central bank digital currencies are designed to be stable, to be, let's talk about the US dollar. They are designed to be as stable as a US dollar, not really volatile, not really, sweeping highs and lows like you would have in regular cryptocurrency like Bitcoin and Ethereum and all the other things. They go up and down and up and down. Um, These CBDCs are designed to be stable. A dollar is a dollar is a dollar, inflation notwithstanding. But it's also supposed to be coupled with the efficiency of digital technology. So all the efficiency that we currently enjoy with our credit cards and debit cards and all of our electronic transactions, all of that is just an electronic or digital representation of traditional US dollar bills being shuffled back and forth. What if we completely got rid of the actual US dollar bills and everything was just digital? Some may say that it already kind of feels like we're there right now. But the big difference is that you can take all your electronic representations of your US dollars, ostensibly, and you could go into the credit union or you could go into some uh, platform and exchange all that for real physical cash. You can take all of your $100 bills and stick them under your mattress if you want to. This does away with that. The idea of a central bank digital currency completely does away with that. Proponents of CBDCs will say that it can aid a central bank's ability to manage an economy. Um, we can get into philosophical discussions about the mandate of the Federal Reserve and what they are supposed to be accomplishing. Um, Ideally, one of their goals is to manage the economy and keep inflation relatively low and help promote employment and all those things that help promote a stable and robust economy. Proponents of CBDCs will say that, hey, if this is all digitized, if this is all digital and electronic and blockchainy, um, it can be much more efficient. And if the Fed wants to nudge the economy this way or that way, it can do so much more effectively and efficiently. Okay, well, what if we start talking about the idea of CBDCs, digital dollars for Joseph as a retail person versus wholesale lending, wholesale investing? Do we have different digital dollars for those two environments? That's a question, and I'm not saying that that necessarily has to be the case, but that is a question that pops up in this realm. Now we get into some other concerns. What about privacy? What about security? Is every one of my digital US dollars serialized? All of our bills, like our notes, they all have serial numbers on them, but nobody really reads them. I guess some people do, but generally, you go buy a candy bar at the gas station, nobody's going to scan that serial number and know that Joseph bought a candy bar at the gas station. Well, what if I do that with my digital dollar? Well, now we start saying, that's interesting. What if I want to purchase some sort of goods from some sort of website and I don't want the US government to know about that? Is that, are my transactions private? That's an interesting consideration. Maybe they are, maybe they're not. Those are very important questions. And also, how do we integrate? And this is the same problem that we face with US dollars and euros and Deutschmarks and all the other things that we've had throughout history. How do we integrate one nation's central bank digital currency with another nation's? What sort of exchanges do we have in that regard? So these are very real things. These things are really going on. Countries are actually implementing this. Let's talk about some of the recent updates in this field. Just as recently as this month, earlier this month, the European Central Bank published their fourth progress report. They are doing this. They are pursuing this. Um, that they are engaging with this thing, and they are getting ready for a pre-launch phase in the European Union. At the end of March, the Central Bank of the UAE confirmed they are actually going to launch this year. Theirs is called the digital dirham, will in fact be legal tender later this year. They are actually doing this. Now, I say they're doing this, it sounds like it's doom and gloom and disaster. I don't mean that at all. I'm just saying this is real. They're actually doing this. The People's Bank of China. Surely China's, I mean, they're a huge economy, but they're not going to weigh in on this, are they? They're not going to wade into this territory, are they? Yes, they are. They are expanding their pilots and they are pushing and trying to get more and more of their people to get on this bandwagon. They are, it is a thing in China. They are pushing for its use. They are pushing for its expansion. They are moving in that direction. Well, what about in the United States? Earlier this year, President Trump actually issued an executive order saying, hey, we are all for people experimenting with crypto and developing new technologies, but as for the United States, no, we are not doing a CBDC, at least as of that executive order. And of course, that can change and things can change. But those are some recent updates with regard to central bank digital currencies. That's a real thing. Um, at least here in the United States, we don't see that impacting our day-to-day work right now, but it's out there. The Fed has been toying with the idea. Current president has said no. Let's stop doing that for now. But of course, one thing about the United States is that another president can come along and do something different. Um, this is a real technology that's out there. So as we wrap up, let's kind of summarize some of these final thoughts. Every good presentation needs to have some alliteration. So all this stuff, this blockchain technology and CBDCs, is this a digital doomsday or is it a delightful disruption? Isn't that cute? I'm really proud of that. So first off, all these technologies are indeed real. They really are. This is not just sci-fi. This is not pie in the sky sort of ideas and imaginings. These things are real. They are happening. They are reshaping what we do today, and they will continue to reshape what we do in the future. There are a lot of benefits to be had. Our members can benefit from this. We can benefit from this. There are a lot of opportunities. We need to do this wisely, of course, as with any new technology. We need to take into consideration risk management practices. We need to know about the risks that are associated with this technology, these technologies. We need to do things responsibly, but man, let's roll up our sleeves and let's get in there. Let's start learning about this stuff and seeing how we can provide these kinds of services for our members. So that's it. That's my information for you about cryptocurrency and blockchain and central bank digital currencies. I appreciate you being here, and I'll turn it back over to Erica.
Thanks, Joseph. Thank you very much. I wanted to say that cryptocurrency there seems to be a lot of opportunity there for credit unions. Oftentimes with credit unions, and we're sensitive to it, but being perceived as behind technology, the technology curve, comparing, when we're compared to big banks or fintech. And it seems like cryptocurrency, could possibly offer an opportunity for credit unions to position themselves as more savvy.
Yeah,
Um,
you can kind of
so like,
leapfrog into this space.
right.
Yeah,
And also it seems to be a way that they, it's cryptocurrency also is a way to meet the needs of the unbanked and the underbanked, as far as financial inclusion. So
absolutely.
cryptocurrency seems to be, I guess not when you're comparing, but to CBDCs seems to be the one that right now, is I don't know, seems the safer one to pursue. Um, I
It's
mean, I
more
guess,
established. Yeah, it is more
yeah,
established.
and
It's there.
what
It's ready to
and I
go.
and I would say what would be your technology and security concerns for cryptocurrencies?
For cryptocurrencies, the main thing that comes to my mind is volatility.
Yep.
Um, if you I'm sure probably some of the people in our audience today have kind of experimented. Maybe they bought some Bitcoin or Ethereum or something just to see how it goes. And man, that stuff goes up and down just
Yeah,
seemingly on a whim. And of course, there are market conditions that sway those sorts of things, but there is a lot of volatility in crypto trading, which is where CBDCs come in. They say, hey, we can use crypto, but it doesn't have to be so volatile.
right.
Um, we Funny story is that my boss, my supervisor, um, years ago, uh, 5 years ago, was dabbling in that, and he bought some crypto, and he had a little bit of Bitcoin in his little digital wallet on an app on his phone, and he was traveling, and he was at a diner, just some diner that accepted crypto as payment.
Interesting.
And he thought, well, that's fun, that's neat.
Yeah,
And so he did. He paid for his lunch with X amount of, some percentage of Bitcoin. And over the years, he has every now and then he'll look up that whatever it was, $12 lunch to see how much worth of Bitcoin that is nowadays. And at any given time, that could be a $120 lunch that he paid for with Bitcoin. It could be 79 cents.
right.
It's just all over the place. So that's a big thing as far as crypto investing is the volatility. That's something that needs to be kept in mind.
Right. And like you said, credit unions, so far are generally opposed to the CBDCs, with concerns about consumer privacy and risks to the financial system.
Yeah.
Um, but it will be interesting to see as, kind of it's globally, gets some traction, what the United States does. Um, do you think the concerns about the erosion of privacy are valid?
Yes, I do. Um, Now, I don't want to be a Luddite and just resist all
Right.
technology. Get off my
Yep.
lawn. I don't want to be like that. But yeah, yeah. I can use cash to go and purchase whatever I want to purchase, and I think I'm a good person. I'm not out there, you know, buying horrible things, but I can buy things with cash, and my government does not have to know about it.
Right.
Um, what if What if somebody engages in an activity that a government doesn't like? Whatever that activity may be.
Right. Yep.
I don't want to make any kind of political statements, but what if a government said, "No, we don't like that Sally is over there spending money on such and such website.
Right.
You know what, Sally, you don't have any more dollars anymore." Holy moly. That may seem like doomsday and no, that would never happen. Well, stuff happens, you know. So yes, that is a very real concern. That's a very important concern.
Yeah.
Absolutely.
So it'd be interesting to see, once if there is an interest if underlying regulations are built, then what happens, and so the future for CBDCs is, uncertain right now in the United States, but it'll definitely be interesting to see what
Yeah.
happens. So,
Proponents of CBDCs are frustrated by the president's executive order saying, nope, nope, we're not
right,
doing CBDCs
right,
because that ostensibly sets us up to kind of fall behind what other nations are doing.
right,
And other people
right.
would say, I don't care. I don't, that's a bad thing. That's a dangerous thing. I think those other nations are going to rue the day that they engage with CBDC. The argument can go both ways. So it will be interesting to see how and whether the United States participates in this technology.
Well, if anyone else has any questions, Joseph is here, but otherwise, I want to thank Joseph for being here with us today. His presentations are always thorough. They don't miss the mark. They really provide us with all the information that we're looking for and then some. And so, Joseph, thank you again for being here. And we will look forward to seeing you in 2 weeks for part 2 of this series about latest trends and innovations in financial services, where you're going to be talking about generative AI for personal finance.
Yes.
So we'll see you in 2 weeks. So that's exciting. And then next week we have Jeff Rendell Rising Above Enterprises. He's going to be giving a presentation about 20 trends that will shape your credit union's future. And then again, like we said, Joseph will be back on May 13th at 11 a.m. And then May 15th, I sent out an email. We are going to have Jason Huang of the FHLBB to give an economic update on the U.S. economy. That should be pretty interesting. It's definitely on everyone's minds now. So please join us then on May 15th. And then I just added in early June, we're going to be having a webinar about serving the underserved the right way and increasing loan growth and profitability. I am right now working on setting that date. That will be in early June. So keep an eye out for that and for some other future events that'll be coming throughout the season. And with that, thank you again, Joseph, so much. We'll see you in another 2 weeks. And thanks everyone for being here today.
Thank you.
Thanks. Take care.